Welcome to This Explainer. Today, we are unpacking one of the absolutely most misunderstood financial tools out there for homeowners over 50. Look, if you own a home, you've likely got a massive amount of wealth just sitting there, literally tied up in your walls. But figuring out how to actually use that equity, well, that can feel incredibly intimidating. So today, we're going to strip away the neighborhood gossip, look directly at the facts, and give you a crystal clear understanding of your real options.
Right off the bat, let's address the elephant in the room. Are they a trap? It's the single biggest fear families have. Honestly, just hearing the words reverse mortgage might make you tense up a bit. And you know what? Given the wild rumors and those skeptical late-night TV segments, it is completely understandable to be wary. People worry it's a scam or some desperate last resort that's going to leave them out on the street. But we really need to ask, is any of that actually true? To give you an idea of the sheer scale we're talking about here, check this out. U.S. seniors collectively hold nearly $14 trillion in home equity. $14 trillion. That is just a staggering reservoir of wealth. And today, we're going to see how safely accessing a piece of that wealth is the exact opposite of a trap. For the right person, it can literally be the key to financial freedom.
So here is our roadmap for today. We're going to cover 1. The reverse mortgage stigma. 2. How a HECM actually works. 3. Protecting your home ownership. 4. What happens to heirs? 5. Using this as a strategic financial tool. And 6. Taking the next steps.
Let's jump into Section 1, the reverse mortgage stigma, and why it is just so misunderstood.
The absolute most crucial thing to understand is that a reverse mortgage is a highly regulated option, not some desperate last resort. Yet, in places like Chicago and the south suburbs, this tool is drastically underused simply because folks don't have unbiased information. Whether you've heard dire warnings from a well-meaning neighbor or seen questionable headlines, the truth is, these loans deserve a fair hearing. We have to look at how they actually work.
Which brings us to Section 2, how a HECM actually works. Let's look at the federal facts.
Okay, so when people talk about reverse mortgages, they're almost always talking about a HECM. That stands for Home Equity Conversion Mortgage, and this right here blows the whole scam stigma out of the water. This loan is insured by the U.S. federal government. It is only offered by FHA-approved lenders. That federal backing is a huge deal because it bakes rigorous consumer protections directly into the loan. You're not dealing with some shady back alley lender. This is a highly regulated federal program.
Section 3, protecting your home ownership. It's time to address the biggest fear of all.
Let's completely debunk the most damaging myth out there, the idea that the bank takes your home. No way. The absolute fact is, you retain full ownership and title throughout the entire life of the loan. The lender does not take your house, you're simply borrowing against your equity. It's honestly just like a traditional mortgage in that way. You own the house, there's just a lien on it for the amount you borrowed. And that leads right into this next myth, that you can somehow be forced out of your own home. The reality? You can remain indefinitely. There's not ticking countdown clock. The bank isn't going to suddenly call you up and say, "Time's up, pack your bags." Actually, repayment is only triggered when the last borrower permanently leaves the home, like if you move to assisted living, sell the house, or pass away. Now, obviously, there are rules, but they're literally just the standard rules of owning a house. To keep the home indefinitely, you just have to pay your property taxes, maintain your homeowner's insurance, and keep the place in reasonable condition. As long as you're meeting those basic, everyday obligations, you are totally secure in your home for as long as you want to be there.
Moving right along to Section 4, what happens to heirs? Let's talk about inheritance and debt.
So, a huge worry is that your kids are going to be saddled with a massive debt. But the fact is, a HECM is what's called a non-recourse loan. This is an incredibly powerful consumer protection. It means your heirs will absolutely never owe more than the home's value at the time of sale. If the loan balance grows and somehow ends up higher than the home sale price, FHA mortgage insurance covers the difference. Your family doesn't pay a single extra penny out of pocket for that shortfall. And what's really reassuring is that your heirs are completely in the driver's seat. If they want to keep the house, maybe they want to hold on to the family home, they have the option to just pay the loan balance and keep it. Or they can just sell the house, pay off the loan from the sale, and keep whatever equity is left over. The flexibility stays entirely with your family. Section 5, a strategic financial tool. We're looking way beyond financial trouble here. People think this is only for folks who are completely out of money. But the fact is, reverse mortgages are used strategically by people at all income levels. Seriously, a lot of very financially stable people use them.
They use them to wipe out their current monthly mortgage payments to free up cash, or to fund modifications so they can age in place, or even just to create a safety net so they don't have to sell off other investments when the stock market takes a dip.
Okay, this one usually blows people's minds. Did you know you can actually use a HECM to buy a new primary residence? Let's say you want to downsize or maybe move closer to the grandkids. You can use a reverse mortgage for that purchase, which means you get to move into your new home without taking on a traditional monthly mortgage payment. It is such a game changer for redesigning your retirement.
Finally, Section 6, taking the next steps and getting independent guidance.
So, if you're curious, here is your action plan. First, check the basics. You need to be 62 or older and have enough equity in your home. Second, and this is actually a federal requirement, you have to attend free HUD-approved housing counseling. This makes sure you fully understand everything and there is zero obligation to move forward. And third, bring in the pros. Consult a seniors real estate specialist or a financial advisor to see exactly how this fits into your specific life puzzle.
I absolutely love this quote from our source material. A reverse mortgage is not something to fear. It requires accurate information. That really hits the nail on the head. This is a remarkably powerful tool when you understand it. No, it's not a magic fix for everyone, but it's definitely not something you should run away from just because of outdated rumors. It just requires good, solid facts and the right experts in your corner.
So I'll leave you with this. Are you ready to replace fear with facts and start an informed conversation? I highly recommend reaching out to a free HUD-approved counselor or an SRES professional like Michelle Williams Holmes. Find out for yourself how unlocking your hard-earned equity could securely reshape your future. Thanks so much for hanging out with me for this explainer. Keep asking those great questions, and I'll catch you next time.